let's start with a super quick revision of the next chapter under customs, that is valuations. Very, very important, short question, numerical question that you can expect in your exams. Yes, now starting with section number 15 and 16. Ideally, section number 15 and 16 we have already considered in an earlier chapter before, but just to revise, because we are going to use it extensively in this particular chapter. So what is section number 15? Section number 15 talks about what dates rate of duty are we going to consider for the purpose of calculating the customs duty on the imported goods. So in case of import of goods, it is which are going to be cleared for home consumption. For that, it is going to be filing the original bill of entry or date of entry inwards of that particular conveyance, whichever is later. Date of filing bill of entry or entry inwards of the vehicle, vessel, aircraft, whichever is later. Okay, but so on that day, whatever is the rate of duty, that will be considered. Okay, when the goods are cleared for warehouse, means when the goods are imported, kept in the warehouse and then cleared for home consumption, then in such case the relevant date will be the date on which ex-bond bill of entry for home consumption is filed. That date's rate of duty we are going to consider. Okay, then in case of export of goods, it is very, very simple. The date when the proper officer passes the let export order, means the day he gives the permission. Okay, now you can do the export, now you can load the goods on the cargo, etc. On that day, whatever is the rate of duty, rate of customs duty, that will be applicable on export. Okay, this export rate is given under section 16. Import duty rate was given under section 15. Okay, 15 is super duper important for your exam. Okay, if you get a numerical question, this is one of the part which is 100% going to be tested. Okay, now starting with the main provisions, everyone here quickly, let's start with a super quick revision. Section number 14 talks about the valuation of goods, So in section number 14, there are two subsections, section 14.1 and 14.2. Okay, 14.1 says that, okay, value for the purpose of import is equal to the transaction value. Okay, ma'am, what do you mean by transaction value? Okay, in case of import, transaction value is the price paid or payable when the goods are sold to India. Okay, up to the place and up to the date of importation, up to the time and up to the place of importation, till there, basically on the CIF. Okay, basically on the CIF, cost insurance rate, basically whatever costs are incurred till the place of importation on that particular value. That particular value will be called as the transaction value, provided the seller and buyer are not related and price is the sole consideration. Okay, and similarly, the transaction value in case of export of goods, when we are exporting from India to the other country, then in that case, the price paid or payable by that person for delivery at the time and place of exportation. Place of exportation means India. So FOB, on the FOB, the export duty will be applicable. Are you clear with this? Yes. Acha. Now they are telling that in this transaction value, there are some adjustments that are required to be done. That is commission, brokerage, royalty, license fees, etc. For that, go and refer rule number 10. Anyway, we are going to refer rule number 10 totally separately, right? Then after that, suppose if the proper officer is of the opinion that you are importing or you are exporting such goods which can result in undervaluation, okay, which can result in undervaluation in case of imports, okay, not exports here, which can result in undervaluation of imported goods, then for that purpose, CAVR, Customs Assistance and Value Declaration of Identified Imported Goods Rules 2023 were introduced, and in this particular rules they had told that if the board is of the opinion, if the CBIC is of the opinion that you are dealing in such category of goods, such category of identified imported goods in which there can be probability of undervaluation, then there will be some additional obligations which will be put on the importer to justify the value of the goods. And if value of goods if still is not satisfied, then the valuation will be done as per the normal valuation provisions, rule number 12. Okay, now another important thing, very, very important again for numericals, is your conversion dates. That is, whenever we do imports or if we do exports and if we need to convert Indian rupees into foreign currency or foreign currency into Indian currency, okay, then in such cases, which dates rate of foreign currency conversion rate should be taken. So now first of all, they are telling that rate which is prescribed by the CBIC, okay, not by the RBI, not by the Foreign Exchange Dealers Association, no. Only the rate which is prescribed by the CBIC should be taken on the day when the bill of entry is filed. Okay, the date, the relevant date for currency conversion. Okay, earlier in section number 15 and 16 also we studied the date that is for determining the rate of customs duty. This is for the purpose of conversion. So in case of imports, it is the day on which the bill of entry is filed. In case of export, it is a day on which the shipping bill or the bill of export is filed. Are you clear with this? So as on that day, whatever is the CBIC conversion rate, that will be used for the purpose of conversion. Okay, all these things were given under section number 14.1. 14.1 simply said that if buyer and seller, okay, if buyer and seller are unrelated, price is the sole consideration, transaction value will be the assessable value, okay, subject to some adjustments. This was told in section number 14.1. Now 14.2 says that CBIC can by way of notification for certain goods, for certain category of goods, what it can do is the CBIC can fix tariff values. Okay, what do you mean by this? It can fix tariff value means, for example, it can say that this we had done in classification of goods chapter also, that in that tariff schedule, suppose if the percentage is not given, then they can also say that, for example, for every 1 kg of food grain imported, custom duty is equal to 50 rupees per kg. That way also the customs duty can be made applicable. If 14.2 is not applicable, then you have to calculate the custom duty on the value. Okay, but if tariff value is given, then tariff value only will apply. That is 14.2 is going to override section number 14.1. Okay, now listen. Now they have told in section number 14 itself that in section number 14.1 itself, they have told that while doing the calculations of custom duty, while determining the assessable value of customs, etc., you have to also apply the custom valuation rules. So starting with the first one, that is custom valuation, determination of value of imported goods rules 2007. Okay, here we have got rules from rule number 2 to rule number 13. First, in rule number 2, they have spoken about the definitions. In the definitions, two definitions are very, very important. One is definition of identical goods and the other one is definition of similar goods. Okay, identical goods are the goods which are which are same. Okay, which are same in all respect, features, physical aspect, character, everything is same except for some minor differences in physical appearance, okay, which is not even going to affect the value. Such goods are called as identical goods and those are produced in the same country from where we have imported our goods. It can be produced either by the same person who has produced our goods or it can be produced by any other person, and provided none of the artwork, designing, etc. for that payment has been done by the buyer either free of cost from India or at a concessional price. Okay, if we have done the payment for artwork, designing, engineering for that particular product from India, then can we say the product prices does not become comparable because some cost has been incurred here in India itself. So that will not be considered as identical goods if the buyer has made some payments. Okay, if the buyer has has made the payment for that artwork, engineering, etc. here in India. Are you clear with this? Yes. Then the next one is your similar goods. Now similar goods comes after identical goods. Now here they are telling that these similar goods are not alike in all the respects, but they have similar features and they can be used interchangeably. Okay, they have same functions, etc. But they can be used interchangeably. It's not copy paste kind of a thing, but it can be used. And yes, these similar goods are also produced in the same country from where we have imported the goods. It can be either produced by the same person who produced our goods or it can be produced by any other person, but it will not include those imported goods where engineering, development, artwork, design charges were completed by the buyer. Okay, either free of cost here in India or at a concessional price here in India, then that will not be included in the definition of similar goods. Okay, then going on to the next one, which is talking about the related persons. So in this case, employer-employee will be considered as related. Officers, employees of one another business will be considered as related. If I am holding more than or equal to 5% in two different entities, okay, then in that case, these two will be considered as related. If I am controlling someone else, okay, if I am controlling someone else, that is, I am holding more than or equal to 51% of the capital of the other person, then it will be considered, then it is deemed that I am controlling the other person, then we will be considered as related. If we are members of the same family, then we will be considered as related. Okay, all these things are given here. You can just read the definition once, just focus on two definitions. One is of similar goods and the other one is of identical goods, because we are going to use it further in our rules. Then going ahead to starting with the rules. Okay, now section number 14 simply said that, okay, transaction value, on transaction value customs duty will be payable. This was told by section number 14, but along with that, section number 14 also said that please refer the custom valuation rules. So now coming on to rule number 3. Rule number 3 is very simple. Rule number 3 says that in case of imports, transaction value will be, the value for customs is equal to the transaction value which you had taken in section number 14 plus some adjustments of rule number 10. Okay, this is one of the most important rule that we will do. So do the adjustments of rule number 10, that will be the value of the imported goods. Okay, so now they are telling that basically wherever the buyer and seller are not related, okay, then in that case whatever transaction value you have declared plus adjustments of rule number 10, that will be accepted as the value of imported goods, provided there are no restrictions which have been put by that exporter on the importer here in India, except for some geographical sale restrictions or any restrictions which is required by the law in India, or any other restrictions which do not influence the price, then that is okay. Otherwise, if these two are not related, then in such a case, whatever value we have declared, that value will be considered for the purpose of customs. Right? And next thing that they are telling is, what if the buyer and seller are related? Then also they are telling, okay, no problem. If those two are related, and if you are able to prove that the price is not influenced because of relation, that is, business is separate, relation is separate, then in that case, whatever value you have declared, that is the assessee has declared, that same value will be considered for the purpose of calculation of customs duty, provided you also prove that this value is approximately near to the value of similar goods, identical goods, or value calculated as per computed method or value calculated as per deductive method. If you prove it, we do not have any problem in such cases. Okay, but when you are comparing it with your deductive method, computed method, etc., and if there is any big difference between the quantity that you are comparing, I am comparing 1000 with 10,000 kgs, then they are telling please do the necessary adjustment so that they become comparable. Okay, if the valuation is not possible, as per rule number 3. Rule number 3 was simple, na? It simply told that, okay, value as per section number 14, done. Okay, subject to those conditions. If value cannot be determined as per rule number 3, then they are telling, then go and apply rule number 4 to rule number 9 sequentially. That is 4, 5, 6, 7, 8, 9. As per this particular sequence, go and apply the rules and get the value. Okay, now for that, let's start with rule number 4. Rule number 4 says that suppose if you are not able to determine the value as per rule number 3, then determine the value as per rule number 4, that is calculate the value of identical goods. Okay, if identical goods are exported here in India, okay, means imported in India, exported to India or imported into India at or about the same time, at same commercial level and in substantially same quantity, okay, then only it becomes comparable. So in such cases, whatever is the transaction value of the identical goods, that will be considered for the purpose of your valuation. Okay, if you have multiple values of identical goods, then in that case, whatever is the lowest value, okay, benefit given to us, whatever is the lowest value, that will be considered for the purpose of calculation of duty. Are you understanding this? Okay, but then they are telling, okay, in interpretative notes, that is in rule number 13, they have told us that suppose if there is no sale, okay, suppose if there is no transaction value of identical goods found at same commercial level or substantially same quantity, then they say that, okay, no problem, take it at different commercial level. If you do not have it at same commercial level, we are left with no option. Then they are telling, okay, take it at different commercial level, but adjust it, okay, so that both of those become comparative. Okay, similarly, suppose if transaction value of identical goods, those were imported by different mode of transportation and ours is imported by different mode of transportation, then there will be a difference in the freight cost also. So please do the adjustments for that also, so that both of them become comparable. And by doing this, the value as per value of the identical goods, identical or same, Okay, those goods will be determined, and that value will be taken as value for your customs valuation. Okay, now suppose if identical goods valuation is not possible, that is rule number 4 valuation is not possible, then go to rule number 5. In rule number 5, you are going to take the transaction value of similar goods. Okay, everything is going to be same as your rule number 4, but here we are just taking off the similar goods, right? So till here a particular part gets over. Now suppose if you are not able to do the valuation as per rule 3, 4, 5, then go to rule number 6. What does rule number 6 says? Rule number 6 says that don't worry. If till here also you are not able to find the value, then do the valuation as per rule number 7 or rule number 8 in sequence. Okay, but if you have made a request to the proper officer and if proper officer is satisfied, then he will allow you to change the sequence here only. Okay, normally 7 and then 8. Okay, but here if the proper officer has approved your request, then in such cases you can first follow 8, and if not possible, then you can follow 7 also. No problem in that. Are you clear with this? Yes. Okay. Now before that also one important thing from the illustration which I wanted to tell you. Now here we were doing the calculation as per rule number 7. So what did we say? We will take that transaction value of goods which were imported at same commercial level and substantially the same quantity. Okay, and in that if we have got multiple values available, then the lowest value will be considered. Okay, this is given here in the example also. It is there in your ICI material also, or it is there in our material also. You can simply refer it. Right now, section 6 said that go and follow section. Rule number 6 said that go and follow rule number 7, rule number 8, or otherwise in the sequence. Okay, now before going on to rule number 7 and 8, let's take up rule number 10 first, so that things will become very, very simple. Okay, now rule number 10 is very, very important. Rule number 10 says that whatever transaction value you are taking, okay, whatever transaction value you are taking, you are required to do certain adjustments. Now adjustments are given in rule 10.1 and rule number 10.2. Okay, 10.2 let's keep it aside. First let's do rule number 10.1. Now in rule number 10.1 they are telling that there are some expenses or there are some items which are actually the liability of the supplier, the one who is sitting in the other country. It is his liability, but those expenses are paid by the buyer here in India. Okay, if it is paid by the buyer, then that has to be added for the purpose of customs valuation, just like your GST concept. So all the types of commission and brokerages except for buying commission, all the types of royalties, license fee, okay, all the types of cost of containers, okay, cost of containers, cost of packing, etc. All these things, or if anything has been provided by the buyer free of cost or at concession price, then value of that thing has to be added in the value. Or if let's say there is a condition, okay, there is a condition that that particular seller has told that after you have received the goods in your country, after that you have to give me something. You have to, on every sale or every disposal or on use of the asset, you have to pay me some amount as a condition of sale. Then in such cases, all these figures which will be paid by the buyer, that will be added for the purpose of customs valuation. Yeah, right? All these things are given in rule number 10.1. All these things will be added to the value. If these will be added to the value, then value as per customs is going to increase. Okay, more duty will be applicable. Now, the most important thing here is rule number 10.2. Okay, rule number 10.2 says that whenever you are taking the value, whenever you are taking the transaction value, in that you have to add. Okay, this is rule number 10.2. 10.2a and 10.2b. These two will be two different things. 10.2a says that transportation cost, freight, loading, transportation cost, loading, unloading, handling charges. Okay, right from his factory till the place of importation. Okay, till the place of importation, that will be added to the cost. Okay, and next one in 10.2b, the insurance cost up to the place of importation, even that will be added to the value for the purpose of customs duty valuation. Plus, once it has come, once the goods have come into Indian waters or Indian territory, after that if you have paid the ship demurrage charges, lighterage or bar charges, even that will, because that is up to the place of importation, till there everything will be added. Anything paid after that, example transshipment charges, etc., then that will not be added. Are you clear with this? Okay, now coming on to the transportation freight charges, loading, unloading, handling charges. Now, if your goods are imported by ship, okay, by vessel if it is coming, and if the cost is known, these 4 costs are known, okay, then take the actual cost. On that actual cost, duty will be taken. If it is not known, then the deemed cost will be 20% of the FOB, free on board value. What do you mean by free on board value? All the cost till the time of loading the goods by that exporter, that is his cost plus his other country local cost plus freight, except freight, loading, unloading, till the load port, till that whatever is the value, that will be considered as the FOB. On FOB, 20% will be the deemed cost. Okay, but if the goods are imported by air, and if the actual cost is known, then actual cost or 20% of FOB, whichever is lower. Basically, you have to restrict the cost to 20% of the FOB. If the cost is not known, then anyway 20% of FOB will be this value, right? And in case of insurance, if actual insurance in any mode of transport, if actual cost of insurance is known, add the actual cost of insurance under 10(2)(b). If actual is not known, then deemed cost is equal to 1.125% of the FOB, that will be added to the value. Are you clear with this? And then multiple examples, different combinations of examples have been given in our book. You can just refer for the purpose of numerical solving. If not from here, then anyway it is there in the question bank. You can refer it from there also. So basically, rule number 10(1) was all those things which the buyer was required to pay as the condition of sale. Okay, and if it was the responsibility of the supplier but paid by the buyer, so all those things will be added to the value. And 10(2) basically spoke about freight, loading, unloading, handling and insurance charges up to the place of importation, even that will be added to the value. Okay, this was your rule number 10. Then going on to rule number 7 and rule number 8. Rule number 7 is talking about deductive value. Now let's say I have imported some goods. Okay, value is not determinable up to rule number 5. So we went to rule 6. Rule 6 told us to follow rule number 7. Now when we are following rule number 7, in that case, let's say I imported some goods. Okay, I imported some goods, value is not determinable. Then they are telling, okay, check if the same goods, similar goods or identical goods have been imported by someone else. So we check that yes, it was imported by someone else. Okay, then check, has he resold those goods as it is here in India? The other person, has he resold the goods here in India? Answer is, let's say we get the answer as yes. Then at whatever price, okay, at whatever price he has sold greatest aggregate quantity, okay, that unit price at which maximum quantity has been sold, that will be considered as your value. But from that, okay, from that value, just come backwards. Can we say that is the resale price in India? So in that, profit will be added, general expenses incurred in India will be added, taxes in India will be added. So all those things are to be subtracted, those are to be deducted. So basically from resale price, we are coming back to the purchase price of some other person. That price will be considered as our transaction value. Okay, and suppose if the other person had imported the goods and resold it in India, but after doing some processing, then also subtract the processing expenses. Are you clear with this? Processing charges or whatever it is. Okay, that will be subtracted. This is how you get the deductive value. Okay, suppose if he has done, just like I told you, if the other person has resold it in India in multiple quantities, then at whatever unit price maximum quantities are sold, greatest aggregate quantity is sold, that unit price will be considered for the purpose of computation. Example of that is given here and we have done it on our main lectures also, right? Then next one, rule number 8. Rule number 8 talks about computed value. Okay, in rule number 7, what we did was, someone imported the goods, he resold. From resale price, we came back to the purchase price. Okay, now in rule number 8 talks about computed value. So the person from whom we are importing the goods, we will start from his cost. It is cost plus method. So we will start from his cost, his factory overheads, his direct cost, his indirect cost, that will be taken. Plus to that, we will add the normal profit margin that he will charge to any person if he is selling here in India. Plus all the cost up to the, plus all the charges up to the place of importation, that is your freight, loading, unloading, handling and insurance, everything. Can you see here, last line it is written cost or value under rule number 10(2), all these things. So we will start with his cost of production plus the other expenses that he has incurred plus the profit margin, and plus all the cost up to the place of importation. By this we will get a purchase price. Okay, by this we will get a cost, that will be the value for the purpose of customs duty, right? Then rule number 9 is a residual method. Now they are telling if you are not able to get any value up to rule number 8, then as per reasonable means, okay, as per reasonable means you are required to calculate the value. Rule number 10 we have already completed. Rule number 11 talks about declaration by the importer, that whenever the importer or importer is importing the goods, he or his agent is required to submit some declaration in which the details of imported goods, its value, etc. will be prescribed, and if the proper officer is not satisfied with it, he can ask for more and more information from you. And the last one is rule number 12. Rule number 12 simply says that if suppose a proper officer has some doubt that your declared value is incorrect, he has some doubt about the truth or accuracy about the value, then he will ask the importer to furnish more and more information. And suppose if even after taking more and more information from you, if he is still not satisfied about the value, then he will say that transaction value cannot be taken as per rule number 3. If it cannot be taken as per rule number 3, then 4, 5 and so on, it has to be done. Okay, when will he have a doubt on the value which is given by us? When will he have a doubt? When our price is very less. Okay, or if similar goods or identical goods are imported at a very high price. Okay, or if we have done some misdeclaration. Okay, or if we have submitted any fraudulent or misleading documents, etc. Then in such cases they will have a doubt on us and they will tell us rule 3 is not applicable. Therefore, if rule 3 is not applicable, then anyway we have to go as per rule 4, 5 and so on. Are you clear with this? Yes, then there are some other concepts in this. One small thing which I would like to tell you is if there are any transshipment costs incurred. Okay, let's say there is a vessel that has come to the Mumbai port. Okay, and then so Mumbai port becomes a place of importation. All the cost till here has to be added. Okay, let's say after that the ship got changed. We transferred the goods from one ship to another and then the goods were sent to Cochin port, for example. Then the transportation cost from Mumbai to Cochin port or anything after that place of importation, after the goods have been imported at the Mumbai port, any cost after that will not be included in the value for the purpose of customs. Right, then next one they are telling that suppose if there are any goods which are cleared from 100% EOU to DTA, then in that case that will be considered as import. Okay, and if that is considered as import, then your import duty rules, valuation of import rules will become applicable. Okay, another point which is very important. Let's say you have imported some goods. Okay, you did not clear it for home consumption, but you took it in the warehouse. Okay, you cleared it for warehouse. Now, by keeping it in the warehouse, you have sold it to multiple persons. Possible multiples. You have not sold it to multiple persons. You have sold it to someone, then he sold it to someone, then he sold it to someone. By when the goods are kept in the warehouse itself, and then finally someone clears it for home consumption. Do you recollect we had done this earlier also? Yes. Now in this case, for the purpose of customs. Okay, for this case, for the purpose of customs, custom duty and social welfare surcharge, assessable value is equal to the transaction value which is paid to that exporter. The price which was paid by the original importer to the exporter, that will be the value for the purpose of custom duty and social welfare surcharge. But ma'am, what about IGST and GST compensation says? For that we have already studied. The value will be the price paid by the original importer or the latest transaction value when we had sold it in the warehouse. Original value paid to that person outside India. Okay, price paid by the original importer or the latest transaction value when the goods were sold in the warehouse. Out of these two, whichever is higher, on this value IGST and GST compensation cess will be calculated. So this is one such case where basic custom duty, social welfare surcharge will be calculated as per different value, whereas IGST and GST compensation cess will be calculated as per different value. Are you clear with this? Okay, chalo. Now going on to the last part of the chapter, that is export rules. Just like we did import rules, similarly we have got some export rules also, but very less and very simple. Okay, here also definitions are given, transaction value, related person definitions, almost same. Just read it on your own. Now, if we want to do the valuation, first we will go to rule number 3. Okay, rule number 3 says that no problem if buyer and seller are related. First of all, let's take unrelated. Then your transaction value, zindabad. Okay, that will work. Suppose if both of them are related also, then also your transaction value works. Transaction value we had seen in section number 14.1. Okay, your transaction value works provided you prove that price did not influence, relation did not influence the price. Okay, if it cannot be done as per rule number 3, then go to rule 4, 5 and 6. That's it. Okay, go to rule number 4, 5 and 6. That's it. Now, what does rule number 4 says? Rule number 4 says that calculate the value as per comparison. Okay, how do we calculate the value as per comparison? Value of exported goods will be dependent on the value of like kind and quality goods which were exported. Now we are talking about export, right? Which were exported at or about the same time to other buyers in the same destination country or any other destination country. So basically, if such goods or similar kind of goods, if these are, now we have exported it to someone, okay, that value cannot be determined. Let's say if this has been exported to some other buyers, either in that same destination country or in some other country, then at whatever price it was exported, that will be considered as your transaction value. But yes, definitely, please do the adjustments. Okay, please do the adjustment for freight cost, please do the adjustment for quantity, please do the adjustment for quality and all those things, right? Then if suppose determination as per rule 4 is also not possible, means let's say there are no goods of like kind and quality and all those things, then go to rule 5, that is computed value method. Okay, computed means that addition, means now if you have exported the goods, can we say you would have also produced those goods? So whatever is your cost of production plus whatever is the normal profit margin that you add plus all your expenses up to exportation, add all those, that will be considered as the transaction value. And last one, if none of these rules are possible, then residual method, that is on reasonable basis the valuation is going to be done. Are you clear with this? Then rule number 7 and rule number 8. Rule number 7 says declaration by the exporter, means whenever the exporter is exporting the goods, then he will have to file the declaration which will contain the transaction value, details of the export and all those things. And rule number 8, the proper officer, if he has some doubt, he has the right to reject the value, that the value as per rule number 3 is not correct. Therefore, we will have to go as per rule number 4, 5 and 6. Are you clear with this? Yes. Then after that, last section, that is section number 19, which talks about parts, accessories and all those things, and the set of articles. Now let's say if you are importing, just relate it with your mixed supply and composite supply. Remember? Okay, now let's say if you are importing set of articles. Okay, let's say if you are importing set of articles, 2 to 3, combination of 2 to 3 articles together, okay, which are not naturally bundled, okay, but you are importing it as a bundle. Then in that case, first of all, they are telling, check if government has specified a tariff on that as per section number 14.2. If yes, then it will be taxable as per 14.2. If no means it is taxable as per the value. Then they are telling that check the individual items in that set of articles. If all are taxable at same rate, everything is taxable at same 10% rate of duty, then the entire set of article can also be taxable at the 10%. Okay, but if it is taxable at articles in that is taxable at different rate of duty, then in that whatever is the highest rate of duty, okay, whatever is the highest rate of duty, at that the entire set of article will be taxable. Okay, now let's say if you are importing some accessory, okay, if you are importing some accessory and if you have fulfilled the condition of accessories conditions rules 1963, that this accessory is mandatory with the main product, okay, battery mandatory with the mobile phone, then in that case battery will be taxable at the rate at which the mobile phone is taxable. Manageable till here, everyone? Yes. Okay. Then in the case laws, second case law is very important, that is Gira Enterprises. You have got questions also on this. Here they are telling that suppose if department says that valuation has to be done as per rule number 4 of the import valuation rules, that is identical goods, okay, and the department is telling us that the valuation will be done at some higher prices. If the department is doing valuation at some higher prices, you have all the rights to ask the department, why are you doing the valuation at the higher prices, and the department is bound to provide you the explanation why the valuation is to be done at a higher price. If department does not give you the explanation why they are doing at such higher prices, then valuation cannot be done at that higher price. So your burden of onus is on whom? The onus to prove is on the department. Okay, and one more case law here in case of indoor rubber and plastic works, where they say that after importation, okay, after importation, if we have incurred any marketing expenses, advertisement expenses, promotional expenses, then that will not be included in the value. Why it will not be included in the value? Because this is done after importation. Okay, whatever expenses we later on do here in India, that is anyway not included in the value. Are you clear till here? Yes, this was an overview of your valuation chapter. Please, please, please do the numerical questions from this chapter, from the question bank. Okay, if you are doing it from the question bank, no need to do it from the textbook, because I have covered similar questions in the question bank also. If you cover question bank, there are some 4 or 5 very important questions which I have marked in the main classes also. So please, please make sure that you try the numerical question, because 100% it is going to be tested in your exams. Done, 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 done. Bye bye.